Yo, yo, yo. What's up, everyone? Want to come on live um, and chat about stock market and coronavirus. A lot of crazy things have been happening in the markets, and looking today, markets are down 5%. And it's just been really weird what's going on with the coronavirus and everything like that. And the stock market, this has been the probably the most amount of decreases that we've been seeing in the stock market in the last decade or so. So a lot of people are figuring, fear and greed are the two areas that we need to avoid when it comes to managing money. We don't want to be too greedy, otherwise we're buying at the highs, and we don't want to be too scared. Right now would definitely be the fear index would definitely be high right now. Taking a look at the markets, if you would have invested, you're basically getting the same prices that we would have gotten December of 2018. So that gives you an indication of how far the markets have gone down. So in the last year, everything that we've gained, we've now lost. It's just scary for a lot of people because year to date, the market's down. We've got as high as almost 30,000 on the Dow Jones. Now we're down in the 23,000s. So things have been really, really strange. I don't even really know what the coronavirus is. When did it start? So coronavirus, let's take a look. Coronavirus pandemic started at late part of 2019. So as of March 11, 2020, the World Health Organization declared the outbreak a pandemic. I'm not really good with words. A pandemic is an epidemic of disease that has spread across a large region, for instance, multiple continents or worldwide. So that's what's happening with the coronavirus and the cancellation of a lot of events. So the stock market to the coronavirus. Why would the stock market go down? Because of a widespread, pandemic, as the internet was saying. So I could say I learned a new word today. That'd be cool for if I was taking the SAT, a word a day. And so basically, the stock market's saying for future earnings that the coronavirus is going to hurt lots of companies, which has caused a lot of selling. So if you think about, let's think about airplanes. I believe airplane rates have gone down a lot. I saw a funny post from Jose, the millennial. He's a millennial finance guy on Instagram. Jose the millennial. I can't remember, but on Instagram, and it was saying people were buying airplane tickets because they're dirt cheap right now. And they're just like, if I die, I die, but at least I'm getting a good flight. So if we think about that, coronavirus is hurting future things that we see coming up in the next 3 to 6 months. Is probably going to be less than what we've seen the last 3 to 6 months because there was no coronavirus. Now we're living in a world with coronavirus, so the future we have to deal with that. So that's going to cause airline stocks to go down in value, and people are going to sell them. With oil has gone down. Most of our oil in the United States is imported from other countries. Anything that's imported from other countries is going to be very, very affected by this coronavirus. So if we think about China, that's going to be manufacturing. So all the goods that are supposed to come from China has been, caught and put it to a complete halt. When I was at the PGA show at the end of last year, there was a company there, and they had these really cool products, and I wanted to buy a couple of them because they were really good. I logged onto their website, went over, found the products that I was looking for, and on their website it said, due to the coronavirus, all orders are going to be delayed and we need to get on a sign up list. So if we think about companies that manufacture things that are made in China, I'm pretty confident mostly everything that we buy is made in China. So that's another reason coronavirus is going to be affecting the stock market. So we've talked about airplanes, the future amount of money airplane companies are going to make is going to be less in the future than it has been in the past, which has caused, airplane stocks to go down. We import things from other countries, so China. So any company that makes things from China is going to be affected as well because they've halted production due to the coronavirus. Another big topic is oil companies. Oil stocks have gone down a lot as well. We import most of our oil from overseas, and that is also being impacted by the coronavirus and has caused a lot of people to push the sell button. Just taking a look here, let me pull up a couple of things. A couple of resources I like to look at for anyone who's looking is Yahoo Finance is one of the best ones. They've been around for a long time. I also like to look at CNN Money pre-market trading. The pre-market trading allows you to look up what the markets are going to do before they open, which can be very valuable. If you're an early riser, you just want to see what the markets are doing. It takes 10 or 15 seconds out of your day. You don't want to be on your phone, buying and selling when you should be working. So if we look year to date, the Dow Jones is down 17%, and we're in January. We're a couple months in. In the last 5 days, though, the Dow is down 13%. So 13 out of the 17, which is a majority of the percent that we're down, has happened in the last 5 days, which means there's a lot of changes that are happening in the markets. And when there's change, this catastrophic with the markets going down, that's typically when you need to think of things differently. Like, why are things going down so quickly? Why is everyone selling at this time? It's not. It's highly unlikely that this trend is going to continue because of coronavirus. I was pulling up stats earlier on the coronavirus death toll. So getting some sources here. There's rotometers.info. So we've had almost 125,000 cases, 4,500 deaths. So if we think about that, about less than 5% of people who get the coronavirus have passed away. So it's a very unlikely chance that someone's going to pass from coronavirus. So it's not like coronavirus is something that's going to be like the bubonic plague from medieval times. Bubonic plague, take a look. Bubonic plague was catastrophic in medieval times. It killed 50 million people through Asia, Europe, and Africa. That is a lot. 50 million people. So this is definitely not on the same level as something as like the bubonic plague from back in the medieval times days, or what it says in the, I'm not sure exactly when it was, but I feel like medieval times is right. Someone can fact check me on that. I don't know everything, and I don't claim to know everything. But all in all, coronavirus is affecting the markets for those reasons. It's putting a halt to production in countries, and even here in the United States, they've canceled Coachella. Flights are being canceled. So it's that's really why it's affecting the markets. Let's take a look here. If anyone has any questions put them in the comments and we can address them here while we are live, whether on YouTube or Facebook. And a big question a lot of people have asked is now a good time to buy? And it would basically, the simple answer would be yeah, now is a good time to buy because you're able to get stocks at a price that are 2018 prices and we are in 2020. So that's good. But you want to be very careful when it comes to investing when things are this volatile because it's very easy for you to invest $1 and it to turn to 80 cents very quickly. And that's what's happened. If you invested $1 at the end of the year, at the beginning of this year, it's worth about 80 cents today since the markets have gone down about 17, 18%. They've just been all over the place. So the way that you strategize with that is if you know a strategy or you need to speak to a professional, figure out how do you want to, focus on your buying and you also want to focus on your selling. Knowing those two strategies, when the buy, when the sell, are the two biggest decisions that you need to make. It's like, hey, should I buy more? Should I sell? Do I sit on the sidelines? Do I not sit on the sidelines? And those sort of things are definitely going to dictate how your investments do over time. I always like to tell people and share with them that active trading definitely does not benefit passive traders. Active traders perform on average 2 to 3% worse than passive traders. So if you're finding yourself buying and selling and making a lot of emotional decisions rather than logical, well thought out decisions, then it may be time for you to talk with someone to coach you through this. Because when we look at something called the fear index, which is the VIX, it's gone from $15 to over $54 since February of 2020. So it's 15 to 30. So it's almost doubled twice. And that just tells you the sort of fluctuations that we've been seeing. And we really haven't seen these fluctuations in a long time. Over the last 5 years, this VIX, this is the highest it's ever been over the last 5 years, is the moment that we're in right now as I'm talking to you. And that can be scary for a lot of people. No one likes to see their money go down in value. However, we need to keep the long-term mindset in play and realize that at this point in time today, this is the most money that you've ever had in comparison to where you've been. So you need to make sure that like, hey, like this is a good thing. I'm able to get discounted prices, make sure I have a solid strategy moving forward. And, patience and time are the great equalizer to help us get where we want to be when it comes to, business, money, health, relationships, wherever we may want to be. So to summarize what we spoke about coronavirus. It's not deadly. Well, it is deadly. It's not as deadly as other diseases that we've seen, such as the bubonic plague. Um, I made a post earlier that 300 in the world. You can do the math. Very small amount of people have gotten the coronavirus, and a very smaller percent, even a smaller percentage, has passed away due to the illness, which is terrible. No one wants to see people, pass away or anything like that. But we need to put things into perspective here that coronavirus isn't the worst thing that we're dealing with. And coronavirus is impacting the stock market because it's halting production. I met a financial advisor the other day, and he was actually supposed to go to a conference at a hotel in Orlando. If you think about how big a down in Orlando is near the convention center, probably 500 rooms or so, they canceled the entire event. So think about what that sort of impact had on one hotel, one business, and just exponentially multiply that by everything that's going on in the world. And that's why things are a little bit funky right now. I'm not a fortune teller, but history would probably say that after coronavirus settles and the dust settles, we'll get a good push forward back into the markets, and we'll get a little bit of a bump. But obviously, need to make sure that we're taking appropriate risk. We have a good strategy, and in the end, we will end up victorious because today is just a part of where we're going to be down the road. That's all I really had to go over today. If you have questions, like I said, I'd be happy to answer them for you. Feel free to comment, reach out to me through YouTube, Facebook. It's 2020, so it's very easy to find each other nowadays. And enjoy the rest of your week. And we will. I'll chat here for a few minutes. I'll stay on if anyone has any questions here on Facebook or YouTube. I can stay on for another 10, 15 minutes. I saw my boy Manuel. What's up, man? Haven't spoken with you in a while. We went to Florida State. I guess he was telling me December 2019 is when Corona. All right. Well,